Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, August 7th, 2023. Before I click through all the charts, as usual, just want to encourage you to please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this, daily analysis in the SPY, in the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% swings on those underlying stocks. In fact, last week we put out two, Carlisle, CVS Health. You may want to check those out. Subscribing to wickedstocks.com, you're offered a 5-day free trial up front, so you could see the those all the stock picks we've actually completed over the last month that you may want to take a look at. If you don't like what you see within 5 days, you can bow out, cancel your subscription at no cost to you. So on with the charts. Actually, I want to take a look very briefly at analysis that we do provide our Wicked Stock subscribers, every week, every day in the SPY, and every week in the S&P 500. But this is a SPY chart that we tested a longer term channel top. Now, the SPY is bullish longer term. I'm not going to get into that, but we did come off what I would call a midterm resistance area that had been a 2 to 3 month objective a couple of weeks ago. We are rotating south. The question is whether we'll continue south, and this market is approaching meaningful support this week, probably on Monday. I'm not going to get into that either. I'm just saying that would be included with the wickedstocks.com subscription. Let's jump into the Tesla itself. That's why you're tuning in, of course. 296.65, big picture, and we'll work our way into the day. We came off of this channel top after a pretty vicious head fake to the upside 3 weeks ago, as you recall, pushing through this meaningful channel top, but certainly not closing below. It actually put out a key reversal high that very same week by settling below the previous week's low. 296.65 is our resistance midterm, and midterm for me is kind of the 2 to 3 month outlook, and then beyond 2 to 3 months is long term. So long term, I still like Tesla above 179.70. Actually, to be more clear, I still like Tesla above 206.36. That is the channel bottom on the daily chart to the 296.65 channel top on the weekly chart. So this trend line roughly, actually it's a little higher than this trend line, is in the low 200s, the channel bottom to the channel top. It's hard to put them both on one graph without it looking like a big mess. Anyway, 296.65, our midterm resistance. We've tested it a lot over the last couple of months, and below which the low 200s are calling, if you will. The market can, over the next month or two, fall into the low 200s, as I've been saying now for some time. 217.65 is the February 23 high that precedes 206.36, and as we move into that third week of August, this channel bottom actually converges with all that. So, that may be the ultimate destination, if you will, is 217.65. There's no clear sign, in my opinion, that we are bound to test that 206.36 formation, rising to 217.65 over the next couple of weeks, unless we were to close today, for instance, below 246.50, a rising one-third speed line that is trend defining in its own right. In other words, in terms of speed line analysis, and it's kind of contradicts what the channels are saying, but that's just kind of the way it goes. You use more than one method of analysis, they are going to contradict each other, but there is a way of blending them. I think that actually makes sense. And for me, I consider 246.50 kind of the mid pivot point inside of that wide 296.65 ceiling to 206.36 floor. We can bottom out this week at 246.50, not only for the week itself, but perhaps through August. And from here, rally back within 2 to 3 weeks into this mid 290s and rising a meaningful resistance area. If we were to close below 246.50 today, for instance, then just the opposite. A 2 to 3 week bearish continuation to the 206.36 channel bottom, where yes, we could bottom out not only through August, but even through the rest of the year. I think this is solid bottom picking territory as we move into the fourth quarter and through the rest of the year. And that is kind of the big picture in a nutshell. Let me take a look at the downside today. That in the event we do violate 246.50, and I actually what I would probably should show you is this chart here. I zoom in a bit. 259.52. If you look to the far right here, is an intraday resistance level. I still like it as an intraday pivot point because for one thing, Thursdays. Well, we can backtrack a bit. You can see that this was Wednesday's low of last week. The actual low was put out last Wednesday, and when we came back off of that low, the high settlement was 259.32, still below the 259.52 high of the low. And so it is an area, 259.32 up to 259.52. Yes, we pushed through it. We even opened above it on Friday. We came falling back below it, but I still like it as an intraday resistance area. I do think that if we do push or open, don't see that opening above 259.52, but you never know. If we push or open above 259.52, then you should allow for 268.23 intraday. This level able to contain session strength. And, we could fall off of this in the later week. We could fall off of 268.32 and back to 246.50 within 3 to 5 days. So you could see that actually set up here. So if we test 268.23, solid level for day traders. You can take profits there if you're long for day traders. You can go short there at 268.23. In fact, if you're an options trader, if you're an aggressive options trader, you trade both sides of the market short term. If we test 268.23, you might reach for 246 or 248 out of the money puts that don't expire for at least a week. And inversely, if we test 246.50 today, you might reach for 266, 268 out of the money calls that don't expire for at least a week. That is the very short-term options play here, and I'm sort of expressing the two-sided dynamic that may unfold as we move through the week. But I will say that if we close today, for instance, or any day this week above this 268.23 channel top, I can't say that we've approached 246.50 support, but I wanted to say that after having tested meaningful support, which is yet to occur at 246.50, either way you have it, closing above 268.23 is, I think, a significant buy signal through the rest of the week and into next. It is a meaningful upward pivot point as we move through the rest of the week and into next. There will be Fibonacci levels on the way up, so forth and so on, but really what I'm looking for, and they're not really noted yet, what I'm looking for with a settlement above 268.23 would be a 1 to 2 week rally back to the 296.65 longer term channel top that we find on the weekly chart still here once again. Now for the downside, I'll just jump to this chart here. We do have support levels on the way down. I'll just sort of note this one here, this channel bottom, the 1 week channel bottom at 248.62, precedes, of course, 246.50. All of the minor points have been carefully chosen. They always are. They do have meaning, so they're well suited for the more aggressive day traders who like to scalp 2 or 3 points out of Tesla throughout the day. But really, it is this level, 246.50, that I mentioned at the top of the video as our meaningful support for the week, able to contain weekly selling pressures, possibly through August, and we can rotate back up from there. If we break or open today below 246.50, 240.70 is likely. That is that pullback low from about, a month ago. That can contain intraday selling back up to 246.50. If we can close the day above 246.50, great. I do use settlement-based signals. So we can break 246.50, but if we close at or above it, it still is sort of a bottom-picking dynamic near term as we move into later August. If we break 240.70 today, though, 235.23 is likely. And that is sort of this gap that occurred about a month and a half ago on our way up to 235.23, able to contain session weakness. Once again, if we close below 246.50, I am expecting 217.65, and that is once again shown. Where are you? I'm looking for it. I know I saw it earlier. There it is. That is the high from February of 23, part of a really kind of a narrowing range of support. So once again, last thing I will say is if we close below 246.50, 206.36 rising gradually, our next 2 to 3 week objective, where yes, we can bottom out through the rest of the year. Until then, we can rally off of 246.50 into the mid 290s and climbing. And just a reminder that if we settle today above the 268.23 formation, it's sort of a nice rally into the mid 290s by the end of next week. There, I've said it. Just hit the 10-minute mark. I'm going to leave it at that for Monday's Tesla. Please click like, share, subscribe, and check out wickedstocks.com.